Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Pulse, where we take a look at the market moves in the bigger picture so we know what to expect going into this upcoming week. So from all of the information that we had over this past week, there's been a lot of back and forth. One of the big notable things with gold is just a complete breakdown of that earlier wedge that we had. Now, we were pushing up into an area of support and resistance up at the top, and off of that high, they really just kind of fell apart. It looked like they were trying to gear up for a possible little range for another breakout. This was a fairly strong move after all, but unfortunately for the buyers, they formed a little bit of a descending wedge and broke down, and that is a very aggressive breakdown. It's a huge bear candle. Now, with that type of breakdown, one of two things is going to happen. Either the first scenario, buyers are going to see this as an opportunity to buy in at a cheap price when they haven't had a chance to for a very long time. And that may be where you're seeing this slight little bounce. The other side of the coin is simply the fact that, well, we're at a major area of resistance in an otherwise predominant downtrend for a very long period of time, and we just failed a bullish continuation type pattern. We push up, we form a slight little wedge, they break and continue. In this case, they didn't get that, right? They formed that bullish move up, they had the consolidation, and then failed. So a lot of sellers will be selling into this move, assuming that it's going to continue lower. One big objective that I could see for the sellers is simply filling the gap that formed down here. We still have a wide open gap that the market hasn't come back to complete yet, and that gap area comes in, if we look at the exact level, that level comes in at, let's see here, 1157.7. So 1157.7 is the big objective to the downside for sellers, and right now with this breakdown that is about a 1-to-1 risk reward. If they were going to be selling in here, they put their stops above the highs, their targets are going to be very close to that area. So this level, if we do continue to the downside, is going to be a big area of interest, especially in the coming weeks. Now, obviously, the closer and closer that we get towards these elections of ours, man, I can't wait till these things are done. The closer and closer we get to these, the more and more choppy and difficult and just kind of, for lack of better words, weird the market is going to get. So we do need to be a little bit careful as we approach that good old time of the year. But in this case, you know, that is a definite thing to keep an eye out. The bears have a strong bearish breakout outside of a bull pattern that was trying to form and failed. Sellers are going to be looking at this for a possibility of, well, we're cycling off the highs of the wedge, we just failed a bullish continuation pattern, and arguably we also just cycled off of an attempted breakout failure off the top of a wedge. So there's a lot of things pointing to the downside, and with that big gap objective below, it doesn't look that bad for possible shorting opportunities going into this week, looking for some selling. Now, looking at the slightly faster time frame, going down to a daily chart, we can see even more information, right? Not only did they fail to break out above the top of the wedge, they failed pretty aggressively, but this makes it even clearer in terms of how aggressive of a breakdown that was. Right now, it looks like we're forming a little bit of a bear flag on the daily chart. The one level of concern that I do have is always prior swings. So if you look at the prior major swing right here, we always want to see, you know, were they able to close underneath it? If they were able to get beyond it, did they continue? Well, that's a little bit of an unfortunate thing for the sellers right now. They weren't really able to keep that train going. They closed underneath it one time, right there. Ever since that close outside of it, they've been holding it as support. That's usually a red flag for potential breakout. So even though we are seeing some potential downside momentum, that little clue that we're getting right there almost makes me want to say, you know, if we do get some selling pressure, if they come back to the lows, now with that failure, I have to assume that there's going to be a lot of buyers attempting to pick this low, assuming that the breakout failed already. So this line in the sand right here, that prior major swing low, as well as just the overall lows, that's going to be a huge area of interest. If the sellers can close past it and continue, the next objective is to the major support zone underneath that. But right now, they have a little bit of a brick floor that they have to break through before they get to that area. They are forming the bearish patterns. They do have a bear flag possible for a breakout. They have everything pointing to the downside that they possibly could ask for. But with that little clue that we're getting on that prior swing low, it seems like they're going to have a lot more work cut out for them than I think they would want to admit. So that's kind of what we're looking for right now on gold. Possible selling for a little while, but when we get down to those lows back to the 1250s or so, yeah, they really need to prove it if they're going to start breaking through that low. The next thing on the list, going to take a look at crude oil on the weekly chart. First off, we have a big move down, and we're still kind of flirting between that $50 area, the $40 area, and we continue to ping back and forth off of that location. Now, one thing that we were talking about last week is seeing an equidistant breakout. They broke down aggressively to the bear side and completely failed back towards the upside. And a lot of times when that happens, you're going to find some form of a measurement. Now, the measurement in this case would be from the breakout point to the lowest they were able to go. And then from there, you transpose that to the highs. They broke out here. The highest point of that move would be at 57.06. Now, notably, they may want to go a little bit higher because of that little pennant formation that formed back here that completely fell apart. And that would be a zone between that area as well. Now, notice the bottom edge of that zone is right in the same place. So there is a lot of reason to believe that the buyers have somewhat of a reason to keep going for at least a little bit before we find heavy selling pressure. The big area of heavy selling pressure is going to be from 57.06 back above that prior swing high, and that is above 60 again. So that may be shortly, in the coming weeks to months, that may be on the docket if the buyers want to keep this train rolling to the upside. So in the short term, I am looking for potential slight buying, but a couple little red flags here for the buying side at least. That wedge top that we were talking about last week, that did hold very well, and a lot of times when that holds, if the sellers start showing up to the party, they usually don't stop for a while. So if the buyers are going to come in, they're going to want to hold above this channel high, at the very least above the bottom of this wedge potential. If they start cracking underneath that area, then you would start looking for a further breakdown to the prior obvious swing lows down here, maybe even a retest of that low of the wedge. So the buyers, kind of like gold, except for the sellers, the buyers on crude oil need to show up if they're going to prove this. Otherwise, they're going to have a really hard time here keeping it going to the upside. Right now, though, the equidistant breakout point from the lows to the highs, 57.06 is the major objective above us. Now, if we take a look on the daily chart, it gives us a little bit of a clearer picture. We still have that major area of interest up here between 62.52 and 56.50. We have yet to get up to that point. This is a little more zoomed in on the wedge that we were talking about in a beautiful cycle off of the highs. Now, in this case, this is one of those twin reversals where we look back, and we look at that prior swing, they closed out and immediately closed back in. That's not a good sign for buyers. So again, if the buyers are going to show up, man, the train's leaving the station. They need to show up really soon. Otherwise, they're going to have some problems. Right now, I almost need to give the edge to the sellers, but the only problem I have with that is the buyers are still obviously in control. The buyers have been in control since February. There have been some pullbacks in that, but in the grand scheme of things, the buyers own this market at the moment, at least from pretty much the beginning of the year. So we do still have to give the edge to the buyers, but it looks as though they are getting fairly weak. That may just mean that we go into this week with a little bit of chop and slop. But the way that looks right now, although I would love to be a buyer and maybe in the long term you can get away with it, I think in the short term you're better off looking for possible selling opportunities until we find another area of support. Maybe just a retest of that prior wedge, the breakout pullback type scenario that would also coincide with a little vertex point right there, the bottom of the wedge and the top of the earlier wedge, all coming in the same place, right there. X marks the spot, as you say. So that area would be an area of interest before we start looking to turn back around into buyers again on crude oil. And then finally, wrapping up on the S&P 500. The S&P, I don't think anybody, is really surprised by this one. We're bullish. It's kind of hard to say anything, but the issue with the bullishness that we're seeing here is simply the fact that we've been in a range for a very long time, and we're at the highs of it. We had the low cycle, and for our members, we talked about that for a very long time, trying to buy those lows and pick the move up. And now we're at the highs. So the fact that we're at the highs, this is really where the buyers need to show up and keep this going. We had a very strong move to the upside, beautiful quick little pullback, immediately snap back up through the highs. But as soon as it breaks through the highs, they find some selling pressure coming in pretty much instantaneously. So with that selling pressure kind of on the books here, that may just be buyers looking for a reason to get in at a better price, buying the pullbacks instead of buying way up here. But either way, we are starting to form a slight little top. We have a wedge top forming here. There's a possibility of a little bit of a wider one there. We are seeing successive, not very extreme highs, especially not compared to this whole run higher. We were getting big highs, big new highs, and now after that deep pullback, They're running out of steam a little bit. So at these highs, that's a little bit of a concern because this whole area could just be one big range and we're cycling off of the highs of it. What I would really like to see here is short-term buying pressure, kick the market back up to the highs, retest these highs, run into this big chunk of resistance up here, and then see it dump through the lows. That's a very likely scenario that we're looking at right now, and that would be, if I were looking to be a long-term seller, that would be the place that I would want to be selling. Right now, I think we're way too high to be sellers. We have to give the edge to the buyers, except in this case, you know, it's going to be a little bit tough without seeing some form of a little bit of a better pullback here, and we are at the range highs. So in the big picture, I would rather be selling. In the short picture, I would rather be looking for short-term bounces towards the upside. Now, taking a look at the daily chart, we can see a little bit clearer information here. We're still looking for that pullback area between 82 quarter up to 61 quarter. But that's really about the pullback that I think a lot of buyers would love to see. That would put them back in the earlier range that we had, earlier in the year, April, May, June, in that location. They fake break the lows, shot back higher. They're running into an area of support in the sense of retesting that range, and we're forming a little bit of a wedge. So if we can get this wedge to get a quick breakdown and then snap right back up again, that would be a beautiful buy entry to try to get the market to go back to the highs and then find all that resistance at the highs to potentially slap it farther down for a bigger move. Right now, we're still staying above that 2100 level. That will be a magnet the longer and longer we get, when we flirt around with that level for this long, you usually get the market to come back and test it. And just drawing a line across 2100, it's pretty obvious to see how big of a level that is. So another test of 2100 wouldn't be a surprise, but I would love to see a short-term breakdown into an area of support, namely between 61 quarter to 82 quarter, and then see buyers slam the market right back up again. So that's going to do it for the free portion of the Market Pulse weekly newsletter. If you're a member, stay tuned. Make sure to jump on in to the members section and watch the rest of the video. If you are not a member yet, hopefully this information serves you well. Otherwise, until next time, we'll see you next week.